How does a bank collapse affect you and your family? We got a lot to talk about, and you should be thinking about it. It should be top of your mind. And I got a lot of videos I'm going to talk about. I'm bringing with me today world-leading economists and probably one of the smartest men I know about money to talk about this. He has run over billions of dollars for the Deutsche Bank, has been in the banking system, and is here to talk about what's going to happen to you. So get a pen and paper. Let's talk about three things and how a bank collapse is going to affect you, because there's a lot of people who are running on the bank, pulling their cash out. I brought a world-leading expert in banking finance with us today. Kelly Korshek is going to talk about three specific things. We're going to talk about the loss of deposits and the risk of deposits. We're going to talk about credit disruptions, as well as just the economic impact. And at the end of our recording, we'll talk about some things that you need to be doing today. So Kelly, welcome.
Hello, Laurel.
So it's good to have you back. Let's talk about the bank collapses. How does it affect an individual that's out there watching this YouTube channel today? What's the kind of loss of deposits? And as you're hearing, in fact, I just heard it, this morning at my green juice shop, somebody saying, "Oh yeah, I got to go pull all my cash out."
How does a bank collapse affect us individually is the question. And let me answer it. There's many different ways to answer this question, and I'll go after maybe one or two, maybe three. The first thing we should do, especially to protect ourselves, is make sure that the bank we bank at is FDIC insured. You'll always see a little sticker on the door when you go into that bank or on their website that says FDIC. And of course, I think most of us know that that represents that the Federal Reserve, essentially the US government, will back your deposits at that bank per account for $250,000. So the first thing you can do is, no matter what kind of bank, a regional bank or a money center banks being like a Chase Manhattan or a Bank of America, versus a small bank, a regional bank, which might be something local to your town. The first thing we could do is, if you have more than 250,000, is you could create several other accounts and put some of your money in each of the accounts. They're all protected. But there's other ways that we could be impacted by a bank collapse. So say you have an account at a bank and that bank collapses, but it's under 200, your account is worth less than 250, you'll get your money back. When? That may take a little bit. Most of the time, the Federal Reserve and the Treasury operate together to allow those deposits to clear very quickly. But I have seen times in the past where it took months. For example, you could have had your bank money in Bank Bear Stearns or Lehman Brothers during 2008 and 9. When they collapsed, it took months to get back those deposits, even though they were FDIC insured. That's the first thing. Second thing is loans. If you can't, generally when you go for a loan, you go to the bank that you have deposits with. Those banks will no longer be able to give you a loan, or anybody else for that matter. And if that occurs, that affects you. Even if it's not you looking for the loan, if your local grocer or your local car dealer or your local company that you might be dealing with wants to get a loan and they can't do it, you could lose service. You could lose the ability of something that you do every day because somebody else can't get a loan. And that does also impact you. It may make you drive further. It may make you realize that at the end of the day, other things will fail. Things work like dominoes. Bank failures are critical because they spread like a wildfire, and they spread everywhere. They spread to every person in this country and every business. Those things could cause, for example, prices to go higher. If a company can't get a loan, that means they can't get their supplies and buy from their vendors. That could impact you locally as well as globally, that these prices will go up. So it's very inflationary. Another problem is that the banks have further problems. The way they can also impact you is that at the end of the day, they set the tone for where the prices of your other assets go. For example, the stock market. So the stock market, if there's a broader failure in the banks going forward, and I don't think we've seen the end of it, stock market should not do well. And generally, they will be impacted in a profound way. And that means that your retirement assets could also be at threat. So at the end of the day, we must live with a certain amount of risk and measure that against a certain reward. So when we see things like this, I think we should lower our expectations of reward a little bit, because we've also increased our expectations of higher risk.
So Kelly, give some tips, like what should people be doing then? I mean, should they really go pull their money out of the bank? And you've heard a lot of people say, just go buy metals, go gold, silver, copper. And I know can't give exact advice, but what do you see people that actually do understand investing and banking strategies? What are they doing?
I think there's two things. One, on the banking side, if your deposits are less than 250,000, you're probably okay. However, if they're greater, the first thing I would do, of course, is get a second and maybe third accounts and bifurcate your money in such a way that no account exceeds 250. That's number one. Number two, when you do have money in an environment like this, the best bet is probably not the stock market. It is finding things in the stock market that represent dividends, companies that are very likely to continue to pay their dividends. Personally, and this is my opinion only, I like the oil and energy sectors in this case, because energy sectors, by and large, at this point, fairly priced, but not all energy things are priced efficiently, which means some of them are underpriced, but they're all paying high dividends. So if it's my money, for example, I'm right now heavily into dividend stocks, which pay high yields, and stocks that I also believe that in a bad environment, in other words, an environment where things do not work well, the banks have further problems, that these are stocks that will hold and maintain themselves. Even if they don't, I get the dividend. And assume that there is no more banking problems, well, then maybe they would all advance like anything, like other stocks. And that if those stocks go up, these energy sector stocks will pay you dividends and go up. So I feel I'm protected both ways in an environment where we have further problems in the banking sector that affect the economy overall.
And as far as the economic impact, I mean, what have you seen just in the last few months as these banks have collapsed?
Not a great deal of banks have collapsed right now. However, that's because the news is not quite letting us all know the truth behind all of this, and the fact that the Treasury is trying to bail things out. But what I have seen is a reduction of lending. I've also seen a huge increase in debt. Credit card expansion is off the charts, and yet credit cards now are charging 29% on their loans when you borrow. What this tells me is the underlying thing that we're not seeing in the economy that doesn't fit the memo that the stock market has recently risen like 5% or so. But what it doesn't fit into is that most debt is not, a lot of debt, a great deal of debt is not being repaid, which means this is exactly what happened in 2007, where a lot of debt was expanding, but it wasn't being paid back. So on one hand, debt expansion is generally a good thing. People are what they think are lending. But what the bad side is, the repayment of these loans is also at all-time lows. So that means, okay, maybe they're still lending, which I suspect to slow down. But what's also happening is that people are not paying back their loans, which means interest for people is going up. In other words, their interest burden is higher. This doesn't make a good scenario. And this is one of the reasons I personally am very cautious about the US equity markets and even my monies that sit in a bank.
Absolutely. Kelly, it's been great to have you. Those of you that would like a free copy of the iFlip app, which is Kelly's architected that, and we love it. It's AI driven. So check that out. It'll take you, once you get the app, to a webinar. You learn more about it and see if that's something that you might want to do. And those of you that are enjoying this channel, we're going to continue this series around banking with Kelly. So stay tuned and subscribe to our channel. Click that notification button and be here 5 days a week. And we're coming out with a journal that's going to be really, I mean, can you imagine 52 weeks of watching this channel about business and finance, money, just general topics? And what are you learning and what are you going to do? I guarantee you in 1 year, your life's going to change with money. And those of you, if you have any questions at any time, go to askloral.com, ASKLORAL, ask a question, make a request. And if there's a topic you want me to come live and hear and talk about on YouTube, put it right there. Talk to you tomorrow.